So now let me try to just go over it again. We spotted our ODI, midterm low, midterm high, midterm high. Then this zone is where market is here to trade into. This zone too is here to trade into. Now, our equal low here trade goes as far as this. This market came down and yeah, it didn't even touch our equal low. It came down this body of this stuff after going up again. Traded to this other block here. This was the last green candle before this equal low was broken. This is a daily time frame. So any small move like this is a very huge move on each one. So have that in mind. It's okay. It's series of equal lows. This green candle was the last candle that was created before it was broken. When it comes down here. So now in this instance, I will try to spot our progression block for us. You see, when this market came up again to trade into this place, to trade into this other block, any candlestick that pierces through this green candlestick on this move is a proportion block. So in this instance, you will now point to the one that is a proportion block. Is it this? Hello?
We can hear you.
Yeah. So which one is our proportion block now? Do you understand what I'm saying?
Yes.
Let me explain again. This is our equal low. This green candlestick, our equal low was broken by this move. Then this green candlestick is the last green candlestick that appeared before this low was broken. So that is our other block. I will, for reference purpose, I will do it like this so that you can get it. Then the market came up again, traded into it. If I pick my this thing now, my fib, you see that it traded into 0.786 of it. Now, I don't really need a figure because I just want to explain it to you in a raw time. So now, it traded into it. So this is our what?
Proportion block.
No.
Proportion block.
No.
Like
The
it's
other
just,
block that mitigates this.
yeah, it is the block that mitigated it. You can create a name for it yourself. I don't know, but then it is the block that mitigated it. So in this, is there any candidate that traded into that block after it has mitigated it?
Yes, that green
candle is
can
the
be
first one. So it's our proportion block.
Okay.
Anytime market comes there again, like when, as you can see here, so now this is our proportion block. Now we'll try to take out its body, pick out our fib, we'll do it from anyhow you want it, but then we are just looking for the 50% retracement fib or 0.618. So that's what I used to look for of that proportion block. I'll put it there. So anytime market comes here, as you can see, it's how it reacted when it comes to the 0.618. So this is just a scalping entry for people that like scalping. That's how I used to scalp my stuff. So now you see when it comes here back to this proportion block, you know, it was going up. Both of them are proportion blocks, but this is the first candle that traded there. You can pick this, you can pick this, anyone you want. Then whenever market comes there, we will know this is a sell zone. So we just have to pick a sell entry here. So it gets here and it comes down. So that's how I trade my proportion block. So that's another entry on that market. But then I'm trying to explain this in a long time view. We are not trying to look for scalping entry. So that's a good example of a proportion block. Now, as we were saying, now it traded into this other block. After this other block came down swiftly. Where is it coming down to? To this midterm low, to this zone. After doing that, what do we expect? We expect it to go high. But is this really the way market should move, or is this really the way we expect to move? Why it might come here from that low and start climbing up again? Yes, we don't know how they want to move the market. So how do we know how they want to move the market? Now, that is when my IPDA comes in. You cannot do comparison in this market. So I'll quickly do a simple IPDA pattern that I used to do now so that you can see. when this market was going up, let me say, then I'll pick up my trend line. I'll try to check where the market was broken. So let's just assume these are our rough trend line now. The market was broken when this low was broken. Where was it? It was here. Do you understand? It is not when this trend line
Yes.
was
Yes.
broken. You know the rule of break of market structure in our first part, price action and its history, and price action
Yes.
and its component rather. It's not when the
Usually.
trend line was broken, though, because most people trader believe whenever a trend line is broken, that is when market structure is confirmed. You know the rule of market structure, as I told you, we have as when we are having higher high, whenever this low is broken, whenever it creates series of no, it is creating series of higher highs and higher lows. Whenever this stops creating higher highs, and whenever it breaks our low, we'll first note it down. Okay, yes, we'll notice that's our first view of the market. Is it likely to break? Okay, now let us see maybe to create a series that is different from what we have been seeing because it has already created a lower low. Let us maybe to create a lower high. If it goes like this and create a lower high, yes, okay, now our two has been confirmed. Let us see maybe to create a a load that is lower than the previous one, then we will now confirm that yes, our trend has been confirmed, that has been broken. So that's how I pick my break market. Not like when it breaks the trend line. It might break and I put a trend line like this, break through it and go back inside it and start continuing. So I hope you understand.
Yes, sir.
Yeah. So now let us go back to this. Now the break of market structure happened here, exactly here. So now I'll put my this thing here. Let me try to put it. It happened on which day? On 13th of this month, of last month rather. Now I will count 60 days. I'll count 20, 40, 60 days backward and forward. Now, why counting? How do we count? You can count the candlesticks or check the date here. From this on 13, 20 days backward should be, or let us just count candlesticks, 20 candlesticks first. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So this candlestick is our 20th day. So to get the next 20 day, you can just pick this one, put it here. Then this is our 20th, our day 40. Then our day 60 will be same thing too. You get what I'm doing?
Yes.
Okay, good. So that is it. So this is our 20-day cast, 40-day cast, 60-day cast. So in that zone, we'll try to pick because we believe that the market makers or the algorithm, everything, they just change it after 20 days, 40 days, and 60 days. That's when they used to change the setup of the market. That's where if you see a trend that is longer than 60 days, there is something behind it. Trend should not be longer than 20, 40, 60. That's why we have 20 moving average, 40 moving average, 60 moving average. So now, this now, we now in that zone, in this place, we try to see whatever happens here. So we are going to put our high. We have an order here, we have a low, we have everything here. So now, if I put this thing, cast it forward to, I will have a view of what the market is likely to go. So now it means we are not going to think about doing 60 days stuff. It means we are going to try to erase our mind that something happened there. Like these stuff are useless. Like you get, because they've changed the stuff. So try to make it be as you like this. So assuming this is the market now. Sorry. Now this is the market now. Now in this 60-day period, so I think we can, if we are old enough now, we can overlook here instead of trying to hide it. So now this in this in this period of time we have an ODI, and this period of time we have a low. It's not an old low, it's just a low. Now, so where would the market like to reach for in this next shift? In the previous shift, it was going up, but then a break of market structure occurred. Then where does it break to? When it was going up, where will the market, like, break of market structure in an uptrend is a down, is like that's broken to sell, and then vice versa to down too. So now we expect the market to start going lower, because in the last 60 days it was buying, in the next 60 days it has to be selling. Like, that's the algorithm for it. Now, so it means every other year, midterm year, will not be attended to until 20 or 40 or 60 days. So now anything you want to do right now in V75 should be, I'm coming. This is first 20 days. First 20 days. Let me put it. All we know is in the next 20, 40 days, it will take out either lows or highs in that zone. Now, in the first 20 days, it took out the low. Second 20 days, it is taking out the low it created in that first 20 days too. So I'm just trying to get, don't mind the chat, it is very rough. So now, where would it reach for in the next few days? We can say buy, we can say anything you want, but then in the long run, it is closer to this midterm low than to this midterm high or ODI. So it will not cost it anything to take out this low here and start going up again. Yes. Remember, we still have this on here. I told us to evade anything that happens here because it did not happen in that range. Yes, but then this is a very strong issue. I don't want to say institutional points, strong reference points for them, because they have something here that they have to close. So now that is why this market has not gone higher to close this ODI. Because if you close this ODI, this thing will be in big loss. So it is better they quickly close this stuff. They might move to 50% of it and start going up again. So my buyers on this on 5, from what I've seen, is it should be selling. So how do I pick my sell entries now? That should be our question. Now it is either this thing just goes down like this, PPPP, or kind of break this low. Sorry. Or kind of break this low a bit to create a break of structure, a break you get, then come back to mitigate this. This one will now come to another block like that. After mitigating it, then start selling. Or break this other block, turn it to a breaker block, start going up again to break this high. So it is either of two. But then we are thinking of selling, like from our analysis, we've seen that this market is likely to be going down, because from our buyers, from everything, we've seen the market it will profit the market maker to take the market down than up. Now, so how do we join them? We can join them when we see that this low has been broken. If this low was broken and did not reverse, it means the market is not for us. What we want is it to break, because if it is broken and then we enter sell like that, it might turn on us. It is not very advisable. So it is better whenever it breaks this low, goes up a bit, mitigate this equal. I said equal this other block. After mitigating it, then start selling. So that is my buyer. I think you've seen how I used to approach my market and everything. So that is it on this thing. Mr. Jeremiah, we've talked on Mr. Aziz and Mr. Jeremiah. We did this thing concerning USD AUDCAD. The video, I will put the video on the drive so that you can watch it again. So
Okay.
we talked on AUDCAD, the comparative analysis and stuff like that. if you notice, I used to do my stuff on D1. And I feel that is where most of the stuffs are being done. They don't trade on 1 minute except I want to scalp. I don't trade on 1 minute except I want to scalp. When I'm going to scalp, I'll go to 1 minute. Now that, okay, for example, now assuming now the thing is now below this place. What do I do at that moment? I'll go down, 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 down. Try to zoom it in. Okay, yes, it has gone below this place. Okay, now will it now trade into this place without going up? Or will it? Reason why is really stupid. It can actually go like this and start going up again and start coming down. Can do that way. But then if you want to get on a sell on this market, you can actually, it is very sure that it's going to break this midterm low. You can start selling, break the midterm low. But it is very risky. It might turn on your head. I'm not done of the market. I'm just trying to analyze it based on what I think it might do. So that is it on the online class I want us to hold. I think we've gained few stores and we can actually perfect the way we analyze stuffs now, so that we can be making profit. And also, I was going to teach you guys risk management. I've been having a lot of stuff like, bro, please put risk management because I don't know how to use lot size. I can't calculate loss and stuff like that. So I'm currently making a video on risk management and how to approach the market in a like how to actually manage your money. Because most times the way I do it, all of us should have a trading plan. Okay, I think that should be the assignment. I want us to deduce a trading plan. A trading plan means, okay, now for example, my trading plan, I don't like following, like assuming this market breaks here like this, I don't like selling and following it. That part of my trading plan. I'll never do that because I've already planned that these are what I want to be doing. So trading plan is very essential. I know the amount of money I want to be risking already. I don't just go in the market risking on my account. So that should be stuff that will be your trading plan. Like, okay, you promise yourself that you will not be trading at this particular time. You promise yourself you will not be trading on Saturdays, stuff like that. Whenever you are in more than $10 loss, you are going to close. And then that is how big traders, that is how even business owners, that is how they make money, they make profit from their stuff. You have to follow your trading plan. Use a trading plan that is convenient for you, that you can adjust, or that you can adjust to, or you can adjust it to suit your trading preference. Because now, for example, let's say in my trading plan, I used to promise myself I will only trade 5 trades every week. Now, and then in all my stop loss, I'll be looking for a stop loss that has only $10 loss. Like whenever I hit stop loss, I can only lose $10 there. So now, and then for my TP, I'll be looking for a profit of $30. That is ratio of 1:3. Now, let's assume a particular day and I enter the market in a week and I made 3 stop loss, like I hit 3 stop losses. That is accumulated to $30 loss for me that week. And then the remaining two trades, I said I want to be trading 5 trades. The remaining 2 trades hit my TP. My TP is $30. Then if those two trades hit my TP, that is $60 for me. Why I lost $30, I made $60 back. So that is one of the reasons why I like following my trading plan, because you can just sit down and deduce what is very best for you, and from there you can, because if you analyze from today to tomorrow, even if you get it right, your trading plan and your risk management will show if you are lacking. Like it will be the one breaking you down, be like, but I got this thing now, why am I now losing? What am I doing? So guys, just try to do this a trading plan that is very okay for yourself. So I will put up a video on risk management and stuff like that later. Thank you for your presence in the class, and you all have a good day.
Thank you. Yeah.
Thank you.
Thank you.
Yeah. So ask your questions on the group so I can attend to them.
Okay.
Yeah.